Okay, guys. I think we'll have to kickstart it without wasting much of our time. I'm currently on a trade. This trade is USD card, although it's in profit, but I don't know what the price is doing. It's not giving any strong movement. But I've broken even, so I'm not risking anything anymore. I will leave it to play out. I'm very patient with it. I have done my analysis on that pair on this USD card, and it's a buy. It's a buy. Is supposed to keep buying. It is supposed to keep buying. It's supposed to keep buying. Okay, so if you look right here, these are my yeah. If you look right here, these are my pairs that I trade. The first one here is gold. The second one is Bitcoin, USD. The third is GBP, USD. The fourth, GJ, UJ, CJ, UC, GA, NU, and EJ, and EU, and USOU. But among all of these, my favorite here is I love to trade GBJPY, I love to trade USDJPY, I love to trade CHFJPY, and also USD card. But as you all know, guys, the king among all of these is XAUSD and BTCUSD. But you must be careful while trading these two because they can make you and they can also break you. So this recording today is the market analysis continuation. Yesterday I was analyzing CHFJPY yesterday. Okay, and it's been okay, guys. Back to the recording. Okay, back to the recording. Here is it. Okay, I think that will do. Okay, let us start with. Okay, I'm on this thread. This I'm on this thread. This USD card is running. I have to show you that thread. Look at it. You see here on my Telegram channel, I called the thread this morning. You can see that I called it. This is it, to buy it. And then this was where I asked to tighten stop loss, the same trade. And here I broke, it said break even now. Say break even now. And move sell to 1.39500. And this is it. So it is a good trade so far, although the profit is depleting. I don't know why I think the candlesticks are shabby. They are not that very, the candlesticks are very shabby. Very shabby. Okay. So let me take you fast on the reason why I took this trade, so you can be able to know that and learn one or two from that. Like someone just joined this. Yeah. So you can be able to learn one or two from this chart. Okay, so there is something called top-down analysis. Top-down analysis is top-down analysis. Monash, can you see my screen? Hello? Can you see my chart, this chart? Can you see this box that I just drew out now? What's the color of this box? Right. Okay, there is something called top-down analysis, and I started with that. It is important you always start your analysis from the top and then gradually descend your way down to the lower time frame. That will help you know exactly what you are doing. Okay, so this is a USD card, and then let's go to the weekly time frame. This is the weekly time frame, guys. I have to reset the chart. All right. So looking at this chart right now, starting from here, if you know market structure, although I'm gonna talk about market structure right now, so you can, if you don't know it, you will know it, and if you don't know it, it's not bad. So looking at this chart right now, what can you say that the major trend of this pair is right now? What is the major trend of this pair right now? The trend of this pair USD card right now, looking at this chart from the weekly time frame, is an uptrend, is a bullish trend. What is a bullish market? A bullish market is a market that is doing higher highs, higher highs. This is here is a low, here is a high, here is a low, here is a higher high. Okay, here is a higher low. All right, a higher high, a higher low, a higher high, a higher low, a higher high. Just save time, then a higher low right here, then another higher high, then a higher low. So after a higher low, what next are you expecting on this chart? You are expecting a higher high. The market must do this so that the trend can continue. All right, the trend can continue. It has to do that for the trend to do what? To continue. As long as it is on an uptrend, it has to do this. What I just marked out now is called market structure. What is market structure? We'll do it again. Let's draw something out here. Market structure, the market moves in waves. It doesn't move in a straight line. Although the price is going up, it doesn't go up this way. No, it moves in waves. What do I mean by waves? It means that the market moves in this form, in this pattern. This is a low, goes up, a swing high. Okay, comes down with a retracement. It's called a retracement. It goes up again to go and take out this previous high. It will come up higher, and the new high must be above this previous high. Then a retracement will happen again. It's also called a pullback. It will pull back this way to come up again and take out this previous high. A pullback will happen again. A new high will come and take out this previous high again. A new low will come again with respect to pullback. You understand that already? Another one will come up. A new one will come up. Another one will come up. Now, after this new high, what next should you be expecting? You expect a retracement called a pullback or a higher low. Okay, after the higher low, what else are you still expecting? You'll be expecting a what? A higher high. Okay, this is market structure, and this same thing I just marked out now is something that has been happening in this market right here. Okay, this price you're seeing here moving up and down, it is exactly what I just drew out. That was what the market has been doing. Okay, now this is the low. This is the first low here. Okay, then after this low, the market went up to give you a new what? A high. After the high, a retracement happened and the market gave you a higher low. And after this higher low, okay, market went up to give you a new high. Remember, this new high now is higher in high than this previous high. Okay, then after the new high, the market gives you a new low. Now, what do you see here? You can see that the new low it just gave you is also higher in low than the previous low. That is why we call them higher highs and higher lows. That's why we call it higher highs, higher highs. That's how why we call it higher highs, higher highs. We call it higher highs. Okay, we call it higher highs, and then we call this other one. We call this one higher lows. Why does it have this name? Because the new high the market keeps creating is always higher in height than the previous high, and the new low is always higher in low than the previous low. What do I mean? This is a low. This low is down, right? But the new low here is higher in low than this one. This one is higher. It's still a low, but it's higher. Even the next one also is a low, but it's higher. This other one too is a low, but it's higher. All right? You must understand this. It is higher. Same thing applies to the high. Look at this high right here. Okay, this high, the next high that comes is higher than this previous high. Even the next one again is also higher again than this previous high. The market will continue to give this pattern to print these higher highs and higher lows as long as it wants to continue trending to the upside. It wants to maintain its bullish trend. All right. So this is a low, this is a high, this is a higher low. Why is it called a higher low? I just told you now because this low is higher in high than this first low. Then this low gave you this new high, and this high, remember, is again higher and higher than this what? Than this previous high. This previous high gave you a new low, and this same low is also higher and high than the previous low. Then this low will go up again to give you a new high. After this high, this one will again come to give you a low. Okay, and this other one, this one again will come up again to give you a new high, and this one will also come again to give you a new low. Remember, these highs and these lows continues to be higher and higher than the previous ones, and so on and so forth. Now this is an uptrend. This right here is a what? An uptrend. This is an uptrend. Okay, and then we have an uptrend, and we also have a downtrend. We have an uptrend, and we have a downtrend. And how do you know a downtrend? How do you know a downtrend in the market? A downtrend is just the opposite of this. It's not going up, it's going down. But even though it's going down, it's not going on a straight line to the downside. It also moves in waves. Let's draw that out. The downtrend happens like this. The market comes down, okay, goes up again, comes down, goes up, comes down, goes up, comes down, goes up, comes down, goes up, comes down, goes up. The market continues to go down. But even at that, it doesn't move in a straight line. It is moving in waves. Right here, you can apply what is called a trend line. You can apply a trend line to the lows that price is giving you. You can apply a trend line to it. Okay? You can apply a trend line. You can apply a trend line. And here also to the downtrend, you can also apply what? A trend line. You can apply a trend line. Okay, do you see that? Now the bullish trend, which is this, the uptrend, is making higher highs and higher lows. But now on the downtrend, the bearish trend, the selling market, the price is making what is called lower highs and lower lows. So what is called lower highs and lower lows. Price making what is called lower highs and lower lows. And let me show you that. Now this is a high, is a first high. The high is high. Okay, the market comes down to give you this low. Okay, and then this low goes up to give you a new high. But then this new high is not higher than this first high. It is lower in high than the first high. So it's called a lower high. Then after this lower high, the next thing you're going to see in the market is a what? A lower low. Why is it called a lower low? Is because this new low is lower in low than this first low. Then after this lower low, what do you expect again in the market? You expect a lower high. The new high is lower in low, is lower in high than the previous high. It doesn't come to the price doesn't come close to it. Even though it comes close to it, it is not taking it out. It's not going beyond it. Okay, the worst thing the price can do is that it can come here, come to the same height of this the previous one to make what is called an equal high. Okay, an equal high. But the moment price breaks it above this way and close with a full body candle, then what is known as change of character has happened. Change of character. Change of character has happened. Change of character is also known as shush. Okay, change of character is also known as shush. Once that happens, change of character has occurred. And what does that mean? That means that the trend is changing. The market is turning around. It wants to start doing what? Going to the upside. And this same thing that happens here, this same change of character can also happen on the bullish trend. And when that occurs here, it means that the price now wants to change and start selling. Once this happens on a bullish market. And how will it happen? It will happen this way. This price was here, and then it was supposed to come down, okay, to go up again. But no, it didn't do that. What did it do? The price decided to come down again to break below this previous, break below the recent low. Once that happens, a change of character has occurred. But before you will make a decision, you must wait in the market. You must wait to see. You must wait to see two. You must wait to see two lower highs and two lower lows. That is the confirmation right there. Once a short happens, change of character happens, and you see it, you notice it. You don't rush to start selling. You must wait so that the market will give you two what? The market will give you. Hold on, I'm coming. You must wait for the market to give you two lower highs and lower lows this way. Okay, that's it. You now have your what? Your two lower highs and two lower lows. This is a high, this is a low. A lower high, a lower low, another lower high. What next will come on board? A lower a lower low. All right. So once you confirm this, once you see your short, once your change of character happens here, okay, you do not rush to start selling the market. You must wait for extra confirmation. And what is that extra confirmation? Is for you to wait to see two lower highs and two lower lows. That is your confirmation right there that ensures that yes, the market has changed trend to the selling side. I'm using the bullish market for example. Now, the same thing, the opposite applies on a bearish market. Once you see a change of character, the next thing you must wait for is to have two higher highs and two higher lows. That will confirm for you that yes, the market has started buying, has turned to a bullish market. So I've just explained to you what is called or known as market structure. Okay, so let me delete all of this very quick so I can show you the reason why I went long on USD card this morning. I'm in profit. Yep, I'm in profit and have broken even. Breaking even means that I'm no longer risking any money. I'm in the market. The market has gone up above my entry price, my entry level, and now I'm in profit and I have secured the profit with a stop loss above my entry threshold. So right now I'm risking nothing. Even if the price comes down to hit me out, I will leave the market with a small profit. My capital is protected, so I'm feeling fine. I'm okay. Okay, all right. So right here, guys, with what I just explained to you now, I believe you must have understood what the market structure is. Let's just do it right here again. This is a low. This is a high. This is an uptrend, the bullish market. And this bullish market is making what is known as higher highs and higher lows. The same thing that I just explained to you right now. Okay. So here is a low. Here is a high. After this high, what you expect next is a what? A retracement called a higher low. Because why is it called a higher low? Is because this low is higher in low than the previous low. After this higher low, the next thing that comes is a higher high. It's called a higher high because this new high is higher in height than the previous high. Okay. After this, you expect to see what? Another higher low. After the higher low, you get your higher high. After the higher high, another higher low, then a higher high, then a higher low, then a higher high. Okay, an equal high here, a higher low. Okay, and then another higher high, and then a higher low. After this higher low, guys, what else are you expecting in the market? You're expecting a high that will come and take out this previous high. Okay, so right now I'm buying this market from around this level. Hold on. I'm buying this market from around this level, from around this level, from around this level right now, from around here, I think so. So now, can you imagine if the market, if the price will from here and go up all the way to this point, I'll be making a lot of money, guys. I'll be making what? A lot of money. So that's it. And remember, we are still on the weekly time frame. So let's now move down to we have been able to establish that this market, based on market structure, is a bullish market, is a buying market because it's making higher highs and higher lows consecutively without any confusion. Okay, it's a clear trend. And what is the trend? A buying trend. So now we go down to the daily time frame. This is the daily time frame. And what can you say here? It is still an uptrend. It is still an uptrend. Okay. The current chart right now, the current chart, you can see here the current chart right now, which is this. So what? A buying market. Because if you have to study it again using your knowledge of market structure, I can see that this is a low, this is a high, a higher low. Okay, this is a lower high, but again, a higher low, a higher high. Well, this high should be here. Okay, a higher high, a higher low, lower high, equal low, and still buying. Okay, now if you look at this place right now, this if you look at the market structure right here, there is something the market is doing inside here. The first high, the second high didn't come to take out the previous high. It didn't. But despite that, if you look at the bottom, you can see that the market keeps on making higher lows. And at this point, it came here to make equal lows, three equal lows. And when you see these guys, it's a sign that the market will go up massively. And what happened after that? What happened after that? The price shoot up, giving you up to 50, 100, 150, up to 300 pips. And they still buying. You can see that I placed a red line right here because this is the major resistance the market will get to. And once it closes above it, this price will rise up to get to this spot. And that will happen maybe throughout this week or even up to next week. Okay? Up to next week, guys. Please keep following me. Gradually, you understand everything. Okay, so now we have established again that on the daily time frame, the market is still making what higher highs and higher lows, which is an uptrend. Going down to the 4-hour time frame, remember this is called top-down analysis. We started from the weekly time frame down to the daily, and now we are on the 4 hours time frame. Okay, guys, the same thing. If you zoom out, you can see that the market is still what an uptrend. It's going up. It's going up. Okay, even though it's moving in waves. If you know market structure, looking at this chart right now, you will agree with me that this chart is a what? On an uptrend. The market is going up. It is going up. Okay, this is a low, this is a high, another low comes up here, a higher low goes up here, a higher low goes up here, an equal low goes up here, another equal low, and then it gives you a higher high. Okay, a higher high. The price just gave you a higher high. And if you look right here, guys, I have a red line here which marked out the resistance. The resistance, and the price has already came to the resistance around this. It broke above it here, came down to it, made some noise. Price pushed up again above it. Okay, and I have a trend line that has been coming from the weekly time frame, which is this. Okay, so price retested the trend line and now is buying. This price will keep buying up to this cycle level or to this latest resistance. Okay, it's going to happen. So we move down to the excuse me, let me remove the drawings. We'll move down to the 1 hour time frame, which is my current trend. If you look at it, it's still making what? Higher highs and higher lows. It is still an uptrend. This is still an uptrend, a clear uptrend. A clear uptrend, guys, a very clear uptrend. And why did I say a clear uptrend? The market came up to here, came down, went up here, came down, and even gave you a W pattern, a double bottom right here. If you can see that, the price gave a double bottom right here. You can see it. Give a double bottom right here. This is the first bottom, came up, the second one. Next thing is to go up. double bottom or a W pattern. That's what it's called. So seeing all of these things, guys, I took this trade and now I'm in profit. It's not too hard. I don't keep it hard. I keep it very simple. I don't trade SMC. I trade what is called pure price action. Pure price action, and this is pure price action. Okay, so going down to the 15 minutes time frame, you can see it again that we are on the right side of history. This is the market, and I'm in profit. It will keep buying, even though the candles are choppy. Some are healthy among them, but some are not. But it will keep buying. It will keep buying. Okay, so that's it, guys. Thank you so much for watching. I will continue making more videos for other interesting topics for the forex market, about the forex market rather. Thank you so much for watching, and do have a nice day.